Welcome. Thank you all for being here today. I would like to turn it over to our President and CEO, Jeannie Montano, to give a quick welcome.
Thank you, Melissa. So thank you all so much for being here today. And, a big shout out to Rhinebeck Bank for their partnership and sponsorship of this morning's event. We can't do it without our sponsors, I have to tell you. And we're, able to make these free for everybody. So because of our sponsors. So thank you, Rhinebeck. And we are thrilled to bring you an incredible workshop around two helpful topics, building credit and saving for college. I have to tell you, I wish I had these a long time ago. They're great workshops, and hopefully you'll learn a lot today. But they're exciting and engaging workshops, and please ask questions, use the chat box, and they're going to stop periodically to answer your questions. So please, we want to hear from everyone, and no question is, a wrong question. So please use the chat box. But just so you know, we offer quarterly financial literacy workshops around important topics. So stay tuned for our next one, which is going to be on first-time homebuyers workshop in June. And at the end, Melissa will be asking you to fill out a survey. So please fill it out. It helps us to, make sure that we're, getting the workshops that you want to hear about most. So please fill out that survey. And, I just have to give a big shout out to my amazing team, Melissa and the crew, for putting this together, and they always do such a great job. So thank you. They're such a pleasure to work with. And with that, I will turn it back over to Melissa.
Thank you so much, Jeannie. Thank you all for being here. And thanks again to Rhinebeck Bank. As Jeannie mentioned, we will be stopping every few slides to answer your questions in the chat box. So please don't be shy. It is my honor to introduce Dimaj Friend from Rhinebeck Bank. He's a management trainee at Rhinebeck Bank and one of our fabulous regular presenters and a United Way young leader. Throughout the day, we will also be putting some information in the chat box about some exciting initiatives and events at our United Way. And with that, I will turn it over to Dimaj. Thank you.
Hello, can everyone hear me? Okay. So hi, my name is Dimaj Friend, and I'd like to introduce an introduction to credit. So thank you. I would like to make this really interactive. So please ask any questions. So let's just go into a little bit about me. I started banking at the age of 17. I got an opportunity from a senior executive, and it was just from my affinity for finance and markets. So I would tell everyone to always make sure that if you really want an opportunity, make sure you actually talk to people and have a resource where you can go to, because no matter what, you never know who could probably help you. So I started 17, high school. We have like a business co-op program right now that almost does the same thing, where I have a little bit of time left. So we're in 12th grade. After 12 o'clock, 12 to 5, I would work at Rhinebeck Bank as a teller. I did it for 4 years, going from summers to winters, and it helped me pay for college. So throughout that whole time, I got an understanding of car loans, I got an understanding of transactions, credit, which is very important today. So I got an opportunity late September 2020 to start a management trainee program, which is an 18-month rotational program where I go through the different departments to learn every entry-level role. So that could be like operations, residential lending, sales, consumer lending, which is like the car department, that's what I say, credit, commercial lending. So I got a breadth of knowledge, and you could say I'm finished May 15, 2022, so it's coming up. So next slide, please.
Dimaj, since you're sharing your screen, you would click through.
Oh, okay. Sorry about that. Just give it one moment. Hello, Melissa?
Yes. Would you prefer I share it on my screen?
Yes, please. I'm having
Okay.
a problem.
That's fine. Do you want to stop sharing and I'll put it up on mine?
Pardon me.
All set, Dimash?
Yep, we're all set. So we'll talk about today vocab terms. There's a certain vocab terms where I think everyone should know. Let's just go through it a little bit. We have interest, credit scores, loans and credit cards, and benefits of risks of credit. Below, you will see on the next slide, it says creating budget. It only takes like 5 minutes to learn how to do a budget, but I would say we really want to be immersed with technology. And we see that the digital transformation of age has a lot of young people wanting to understand how they could do it themselves. So what you see right here is a QR code. And let's just do an example. I have my phone right here. So let's go to camera, right? And then you just scan the QR code. And we have a partnership with Bonsai, which gives you the opportunity to almost go through a different module, which has you access different ways on how you could create a budget. I would like to give people that opportunity if they have like a cell phone, could they almost try to practice it? And do we have any questions in the chat?
Dimash, there's one question. Actually, this is something we might be able to save to the end, Fritz. It says, this is from Fritz Tavares from Affinity by Molina. What on-the-ground opportunities do you provide to the residents of 125 High Bow, meaning Newburgh, to feel comfortable with banking, as some may be first-time bankers or have limited income and feel banking may be filled with surcharges and fees? Fritz, can we address that towards the end of the program, if that's okay with you? Because we do have, for example, a product, great. We do have a product that's for people who may have had issues with prior banks. So it's called RB Access, and we can get into that. We'll get into that towards the end of the program. Okay, Dimash, back to you.
Okay, thank you. What slide is this? Melissa? Are we on the credit vocab slide?
Yes.
Yes.
Okay.
Dimash, you can't see the slides?
I can't see the slide, pardon me.
Sorry about that. I thought you could. Yep, we're on credit vocab.
Okay, thank you. So credit vocab, we have a couple of terms right here. We have principal, interest rate, term, and minimum payment. And a lot of banking, you see a lot of different jargons, different words, different verbiage that will describe certain things. And I think at the first step, it's just really understanding what each term really means. So I want to just go through the process and just talk about it. So let's talk about principal. That's the amount of money originally borrowed. Always just think about that. Then we have interest rate. That's a very important term. So that's the cost you pay each year to borrow a certain amount of money, expressed as a percentage. The interest rate does not include fees for the loan specifically. And people calculate or use APR, which is the annual percentage rate, is a broader measure that almost shows you what it would cost to borrow money. So always look when you're doing something in the sense of borrowing money, what is the interest rate? Because that's a good indicator of how much money that you'll actually pay back. And there's a lot of things that can go into the interest rate. So I would say the higher the APR, the more you will pay over the life of the loan. When evaluating like different options, always see which option is better, which APR is actually to your benefit. So there's a lot of different ways and different places you can get loans. So always just look at that key factor. Then you look at term. What is term? Think about it as time frame. How long? The amount of time until all the principal and the interest needs to be repaid. So if it's a 1-year term, that's a 1-year time frame, and you borrowed a certain amount of money, say an example of $1,000, right? The interest rate, say, would be like, say, 2%. You would borrow the $1,000, that principal, and you would make sure you would pay the 2% over a period of time. So that would just be the agreement of every month you would pay just a little bit, which is interest. And then here comes minimum payment. The lowest amount you need to pay towards the debt each month. That is calculated in like back office or with an algorithm or a formula. The minimum payment comes, most of the times people see it in the mail, where they'll see they probably have to pay $50 because they use their credit card for a couple of payments. So now for this, I would always say when you see a minimum payment, always pay a little bit more, because the minimum payment sometimes just includes the interest, doesn't really make you target the principal. And it's always good to say that if it's a $25 minimum payment, you probably pay just an extra $10. So you're hitting the principal too. You're targeting the principal, lowering that amount, because the principal is here, but then the interest rate is going off of what that principal is. So targeting the principal a little bit. So now you're paying less over the course of the period of the loan. Next slide, please. So it's just a little bit of terminology. I just want to get people interactive to the idea of like what credit is. So just a basic thing, and credit is the ability to borrow money with a promise to pay it back with interest. Always know that with a credit card, either it could be a secured or an unsecured. Secured meaning that you have a certain amount of funds set aside at the institution so that you'll be able to use the card. For me personally, when I started out, I used to always love cash. And that was almost like a problem to a certain extent, because it's almost like a switch of perspectives. You understand that your credit score or your credit history tells a lot about the person, or tells a lot about me. And you have to use that in the sense of get anything you want. Borrowed money, sometimes for a car, sometimes for a house, you would use credit to borrow that and to promise to pay it back. Next slide, please. So as you see, someone's building something. So it's really saving on interest by paying debt off as quickly as possible. And I want to just really say that there's two differences. There's good debt and then there's bad debt. And that's really a big difference in the sense of what is good debt. Good debt could be something that has a collateral next to it that you purchase that could appreciate in value. That's like a good debt. Or something that you're investing in yourselves, like a business plan or college or trade school. And then sometimes there's bad debt. Sometimes when you buy an asset, that asset could depreciate in value, causing it to be bad debt because you could be negative equity. What is that, for example? In the sense of you originally purchased the car, right? And the book value of when you got the loan was, say, $30,000. You get the car, but the problem is next year, the car depreciates very fast. And now the market value is lower than what it should be. So now you're negative equity under. So that's just a little terminology there. Next slide, please. So your credit score, that's a big thing. So your credit score is a 3-digit number in the range of 300 and 800, generated from various aspects of your credit history. There's 3 bureaus. There's Experian, TransUnion, and Equifax. You could say these 3 bureaus, they have a lot of power, because depending on your responsibility, depending on your payment history, they aggregate all that data and then they send it to financial institutions, in the sense if you want a loan, or if you want to even take out a car, or sometimes a job will look at your credit. So it's always important. We have a message. Please feel people questions here in the chat. Okay. So yes, so as I said, so 300 to 850 credit score, the three different bureaus, they actually have a lot of power. And it's always important to sometimes every year see what's on your credit history. There's different ways where you could check your credit history free. And it's very important because sometimes, say out of your knowledge, someone could run your credit and that could probably lower your score. So just to see what is out there in your name, that's very important. So now let's see, how do we calculate credit, right? Or credit score. So it's almost broke down into different ways. We have payment history. Payment history is 35%. That means how long have you been paying, right? Then we have amounts owed to current creditors. All the organizations out there that you have requested credit for or a loan from, how much is that? And that's average of 30%. It's, as I said, it's a formula of how they calculate your credit. And then length of credit history. That's also how long have you had it. I started credit with my secured card around 18 years old. So that gave me the opportunity to build up credit, because a lot of times institutions won't just give you a credit card sometimes, especially if you're a young kid. So I got the secured card, as I said, which I allocated certain funds in my savings account. And then I was given a secured credit card, which I was able to use. And then it's just, if you're in college, you use it for textbooks, food, or different things of that. And now let's look at the fourth way, how they calculate it, types of credit used. There's different types of credit. So there's a mortgage, a house loan, house mortgage. So that's a different form of credit that weighs differently. You have a car loan, which that's another form. You have even a phone. A lot of times you see that a lot of the phone companies are doing things in the sense of not 2-year contracts, but they're making you pay a minimum every month, and they're giving you it in the sense of credit. They're allowing you to have it and then you pay it off 2 years. And that's what we see now. We see a lot of different companies in a sense of buy now, pay later firms, which are popping up, which gives you access to credit too. And then the fifth way is number of accounts. How much accounts do you have? How much do you have? 5 credit cards? Do you have 6? Do you have 7? That's also like a different way. So just the sense of repeating it. We have payment history, which is 35%, amounts owed to current creditors, which is 30%, length of credit history, which is 15%, types of credit used, which is the mixed accounts of different credit that you would have, that's 10%, and then the number of open accounts. How much open accounts do you have currently? So that equals 100. So let's just give an example. If your score is a high or like a good score, that is generally considered like that 680. So as I said, it's 300 to 850. So we would say like a 680 is generally a high score, because you can still get a mortgage with the 680. So 680 high score, that means you're a trustworthy borrower and can qualify for more money or lower rates, because the opportunity of credit is to borrow, right? So it's to borrow for $300,000, depending on if you want a house. So people with low scores, a poor score, is generally below 579. Sometimes it's challenging because you see, it's not like you're fighting against the world, but you're almost fighting against the world. Some employers won't see that you're responsible, so they might not hire you. Some different organizations might not give you a loan. And as we see with the car or with the house, certain things are increasing in price very fast. So it's the access of credit. It's that possibility. So sometimes having a low score is a disadvantage, but it doesn't deter you, because it's just, as I said, a formula. So if you know the game or you know the formula, you could just build it back up. However, it will take time. So I always tell people, it's always good to understand the credit a little bit at the beginning, because if you probably mess up a little bit, it takes a little bit of time to just repair it. So just keeping that in mind. And next slide, please. Thank you.
Thanks so much. I think I skipped one, so I think we're on the correct slide now. So we're on benefits of using credit.
Alrighty, thank you. So benefits of using credit, as I said, sometimes you don't have the money. So just having that access to credit gives you that opportunity to get that house, to get that car, to even get that business starting up, because we have entrepreneurs here I could see, right? Anybody who has a business, please just shoot it in the chat. I would love to hear different business ideas, and just know that there's always a resource. That's like the biggest thing. So benefits of using credit. We have large purchases becoming possible. I gave you examples of like a house, a car. Some people like boats, RVs. So there are several more benefits, right? So there's your credit score can increase and you can earn rewards. I would tell you this, there's an abundant amount of money out there with different organizations offering different credit cards. And it's always a person's responsibility when they're using that credit card from that organization to understand how is it rewarding themselves. Like, what do you personally like? Do you like to go out to the movies? Do you like cash back? Do you like to travel a lot? And to understand that the business or organization that you're getting that credit card from has a responsibility to not only provide you credit, but to give you an incentive to use their car. So to understand, hey, what is the reward I'm getting out of using this? Because you're paying this organization or this entity back. So making sure that you get the best benefit is the best thing. So if you like to travel, there's the frequent mileage, there's the mileage cards. So that every time you swipe, you have a little bit of mileage to do or mileage to add on. There's the gas, there's supermarkets, food prices are going up, so that could help. Gas prices are going up too, so to have that incentive. So as I said again, there are several more benefits that I would like to include on this slide. These are credit providing financial flexibility, job opportunities, and the ability to receive better interest and insurance rates. Because depending on your credit score, you can actually receive a better rate than another person because they have a lower score than you. So financial flexibility, what is that? It's a good credit score leaving the door open for additional credit should you need it down the road. We have job opportunities, prospective employers, which it could be anyone. They will often review the candidate's credit history as a gauge of character and responsibility. So different organizations do that. Then we have better interest and insurance rates. High score often qualifies for you to get lower rates for loans and better deals on insurance. So to get that 3% or 4% on the car, because just a basic example, if me and another person were to go into a car or a dealership and we wanted to get a car, depending on my credit score, I could be offered 4.5%, and that same person can be offered 7 or 9%, and that's just by credit. So you will see over a course of time, me and that person could go in the dealership same time. We can get the same car, same color, and it's just that I just had a better opportunity of understanding how to process and do my transactions properly and pay it back with credit. While that person probably made a mistake down the road, and now it's not like they're suffering, but they're paying more for the same thing. And that's almost like the problem. So next slide, please.
Maj, I don't know if, did you want to pause? I do have a couple questions.
Yes. Okay.
Great. One person asked, what would happen if you have a credit card and you don't use it for a long period of time?
What is a long period of time? Is it a month or a year? Sometimes the card company will call you, and sometimes you could fall off the system, but majority of the times, if you don't use it 2 months, you could still have access to the credit card.
Okay. And also someone asked, what score would you have when you're just starting out?
So when you have no credit, it's almost like a zero score, but sometimes having a zero score is really better than having no score. So it's just starting at the beginning. And as I said, it's just taking out a loan that if you want to play the system or play the game to your benefit, it's taking out a loan that you know you can almost pay back. So the route I take is I took a secured card. Some people could take a personal loan in the sense of if they wanted a laptop. You know that a laptop is $1,200, $1,400, getting a credit card, knowing, hey, I'm going to swipe with my credit card, but knowing I have the money in my account to pay it off. And then paying it off that next month. Then you not only build that credit because, hey, you just took $1,400 off on your credit card, but possibly you get a reward that you wanted. So if you want that cash back, that could be 2% or 1.5% cash back, or a little bit of mileage so that you could probably travel somewhere that you like, even South Carolina, probably.
Thanks so much, Tamaj. I'll go to the next slide.
Thank you. So loan, a one-time sum of money borrowed and paid back slowly. Everyone would probably need a loan, or if you don't, that's good too, but sometimes it's good to use other people's money. So loans are typically large sums of money usually used for big purchases that are often paid back over multiple years. That's the time frame. You could have a time frame of like a 1 year loan. A credit card, sometimes revolving credit. So that's like every month, but say we're talking about a loan that could be a 1 year, a 3 year, 5 year, mortgages 10, 15, or 30. So just to give you some examples of different time frames that you can have for a loan. And I just want to ask, like, if we can have it interactive, because I just don't want to talk to everyone or just talk to everyone. I want to ask anybody if they know some other common types of loans, or what are some loans that they've taken out. Like I took out college loans. So I took out, you could say, subsidized loans from the government. So what are some examples of everyone, and what loans have you taken out recently, or it could be? Do you recommend opening your credit card? To answer Janet Rodriguez's question, do you recommend opening a credit card or a small loan if wanting to establish credit? I would recommend opening up a credit card. Depending on the small loan, it's like, as I said, there's a fixed term. So I would always say when you're taking out a loan, try to use that loan for an asset and not try to use it for like a depreciating asset. That asset could be information, which is to upskill yourself, a car, a house, or something that you know can appreciate or help you, not something that can depreciate. So with the credit card, it's a little bit easier because there's so much different ways, and it's less underwriting. Underwriting meaning it's less time for a person in that organization to look to see if you're responsible enough to get that loan. So a credit card is a little bit easier because it's more accessible. You have more organizations trying to offer different credit. So I'd say making sure whatever credit that you do take out, that you make sure that it's rewarding yourself too. Next question. Okay. Any more questions? No? No examples? Okay, so I would say a trade secret for what banks use to determine if a person is eligible for a loan is, you could say, like the 5 C's. Their character, their capacity, capital, collateral, and conditions. The first is character. That's reflected by the applicant's credit history. What's your credit history? What's your character? Have you been paying? Now, the second is capacity. That is the applicant's ability to repay the loan, frequently determined by calculating an applicant's debt to income ratio. How much debt do you have and how much income? So think about it as an example. If I have $200 in debt for this month and my income is $500, I'm actually more than breaking even, and I have a little bit left over. So that's almost the capacity. Do you have the capacity to pay this back? The capital, the amount of money an applicant has or will need. And then collateral, making sure, right, as I said, collateral, an asset that acts as security for the loan. And then conditions, what are the conditions that you'll be receiving the loan? What information do you know that could help you pay this loan back? So just to repeat that, the 5 C's of credit, which are character, capacity, capital, collateral, and conditions. Next slide, please. So we talked about credit cards again, so I just wanted to just show another picture. So a credit card that allows you to buy things now and pay for them later. And always remember you're paying that back with interest. So does anybody have any credit cards that they use, different brands? Does anybody want to interact in the chat and tell me? Anybody have any different card brands that they like Discover, American Express, Visa, MasterCard? Anyone? Discover, okay, hey. Okay. Cashback bonus, that's good, yes. They do, Discover offers a lot of cashback, I remember. Anybody else?
MasterCard.
MasterCard, okay. Costco buy, yeah, I get a discount on gas. Tim. How do you know which card is right for you when just starting to build credit? As I said, it depends on your situation. It's almost being able to sift it out. So you have to, there's different. So going on, I would say Google, or going on a search engine and typing up what cards are out, what cards are available, and then understanding what benefit do I want. And that's always the first thing I would say is, hey, do you want cash back? Because a lot of people want cash back. There's also some cards that partner up with different brands, like an Amazon or like a Starbucks, and then they will allocate certain rewards so that when you do swipe at those organizations, you probably pay less, or they probably have a little bit of funds and they could pay that purchase for you. So there are cards that offer cash back there. Okay. So as I said, credit cards typically use compound interest with payments due every month. Unlike loans, it's possible to avoid interest with most credit cards if you pay the full amount off before it's due, usually the next month. You won't accrue any interest. If you only pay the minimum, you will accrue interest, and depending on the card, you may also pay a yearly fee to maintain the account. And I didn't really touch on that at first, but there's also some cards that you do have to pay a fee. So that fee could be, I would say, like some examples, like $50, 75. I've seen cards that you can pay $250. And sometimes with that annual fee, they'll give you more rewards. So if you do like to travel, you'll have TSA pre-checkout. So you could just easily just go through. So always making sure, what card do I have in front of me and how is this benefiting me? Because as I said, you don't really want to just take out a card and then later on saying, hey, I probably want to cancel this card, because that card now is your payment history. And if you have a card that you probably didn't like, or you didn't really research at first, and now you have this card for 2 years, 3 years, and you want to get rid of it, it's really a problem if you do, because as I said, those different ways of how they calculate your credit, that since that card now, if you wanted to just take that off your credit, it probably built up so much of your credit history that it would be a detriment to you if you were to do that. So just to make sure that, hey, what cards can I actually use to my benefit? And then what are the rewards? Because you don't want to probably go back 2 years or a couple of months later on saying, hey, this card's annual fee is too high, or I can't probably use this because there's better benefits. So you really want to like take your time to sift out what's good for you.
Maj, I have a question that comes up a lot. I know sometimes we all get ads for like Experian and other companies that will boost your score, or is there any validity to those?
So as I said, there's the three boroughs: TransUnion, Equifax, and Experian. So one organization will let you see both of your scores, Credit Karma, and then Experian, you have to actually use the app Experian. And you talked about the boost. So Experian does let you boost your score a little bit. I think you only have a certain amount of times you could do it. And I don't know if they'll boost it a high range. It could probably be 4 points, 7 points. It's probably just depending on that particular person. But I've seen that. I have the app. Agencies will tell you that if you list. Oh, and pardon me. So sometimes when you first get a card, the first month you won't have any interest. They'll do 0 APR. And then say the next following months, they'll now bring you back to what they usually charge people. And typically what the rates will be is 15.99% to 29% in those ranges. There's like a common thing around, you'd say, different card companies in the sense of the psychological aspect of not making it higher than 30%. It's just a number that people try to refrain from. So you'll normally see 29 under. Next slide, please. Thank you, Melissa, for the slides. Give it 1 second. So risks of using credit. So interest is expensive, your credit score can decrease, and debt must be handled wisely. So those 3 things: risks of using it, always knowing that there's a risk if you use it, and you want to just use it properly, because it is your benefit and it's very advantageous if you have good credit, because you're going to be you can actually get almost a lot of things very easily. So the interest is expensive. Again, borrowing money isn't free. Interest means that you're paying back more than you borrowed, sometimes a lot more, depending on the situation. Your credit score can decrease. So that's always a thing to be mindful of. If you miss payments or pay less than the minimum payment, it could seriously damage your score, which will make it harder for you to get expensive things to borrow in the future or things that you probably want in the future. And debt, as I said, there's good debt and then there's bad debt. And just knowing the difference of that and knowing where am I putting all my eggs in what basket. So, hey, if you're going to purchase something, can I pay that back? Or does this actually benefit me? Is this a need or is this a want? So just really understanding that. So if you're constantly vigilant, or if you could find yourself in an unexpected situation, it could be easy to borrow more than you can afford to pay back. And that's sometimes the problem, is that you can overextend yourself. And if you have to pay multiple minimum payments a month, even if that's small, so even if it's like a $15 here on one card, a $20 here on one card, a $60 here on one card, it adds up very quickly. And the temptation then is to continue using the credit to make up the difference. And that can create like a dangerous situation. So sometimes having like 6 different cards and saying, hey, I have different minimum payments on it could add to a higher debt to income. And that could be a problem later on if you wanted to probably get a car loan or if you wanted to get a house. So sometimes when people have that problem, when they have multiple credit cards and they have multiple minimum payments, they'll almost try to consolidate the debt, probably at a bank, or they'll use like another credit card to consolidate the debt so that they can pay it back at a lower APR than what was previously done with the 6 different accounts. So the next slide, please. Is there any questions? No?
Not yet.
Okay, thank you. Credit checklist, as I said, like do your own research. It's always important to do your own research. Don't borrow too much. Don't borrow what you can't afford. So just understanding, hey, what am I borrowing? And do I have money set aside in my account to pay it off? Paying on time, we talked about that. That's very important because that's your credit history. Paying more than the minimum. It's always, as I said, it's always important that if they say, hey, minimum payment is $25, that you're still targeting extra $10, that you're still finding another way to probably get an extra $7, because that extra amount can almost target that principal and lower that down. So now you're paying less over the course of the period, not just paying the minimum, because the minimum is only really hitting with the interest. So always making sure that. So as I said, always research the terms of your credit you intend to use carefully so that you fully understand all the aspects and the specifics. And don't be afraid to ask questions. Like, people are there, and make sure that you're using all your resources, because it's a very tricky situation and it's harder to almost come back than it is to just start. Don't borrow too much. When it comes to credit cards, as I said, it's a wise rule of thumb to not spend more than you can consistently make or that you have. And with loans, you want to make sure that you continue to make your payments, even if your situation changes. And if you do lose your job or you do come on hard times, just really communicating with that institution, making sure that if it's a bank, it's a credit union, if it's an organization which like just gives you a credit card, calling them, having that information that you're, or whatever you're experiencing, having that information on file, so that they probably do a forbearance, they probably restructure the loan, because no matter what, the organization that gave you the credit, they want their money back. But they understand that people go through difficult times. And you can say with COVID, a lot of people went through difficult times. So just Rhinebeck Bank, there was a lot of ways that we help clients with like forbearance, understanding, hey, you're going through a hard time, but let's just restructure the loan so that you stay on track and be able to pay. So as I said, always reaching out, because it's your time, it's your money, but also it's their money. So they want to make sure they get it back, and you want to make sure that you pay, because it's your credit. You probably want something later on. So pay more than.
Caitlin has a question in the chat for you also.
I know people in my life whose parents took out loans in their names and tanked their credit. So anything that they could do to maybe, I personally know people who have been in that same problem, Caitlin. Now, if that situation, like whatever in that situation, if they're a young kid, then they can almost be able to counter it to say, hey, what types of, so as an example, if the credit that that person had, they write it down. What was the time that that credit came on their history? And then they could contact CFPB, the Consumer Financial Protection Bureau. So that's an organization that helps, you could say, people in the United States, and it's a governmental organization. And just remembering, hey, always checking your credit every year, seeing what is your credit history or your credit report, and then being able to just go to an organization or going to the CFPB, contacting them, and then taking that off. Because if you don't have that, or if you have that on your file and you didn't actually take out the loan, it is a detriment to you. And parents do take that as take an advantage of their kids by, if they had probably a bad situation and they didn't understand utilizing credit, that as an example, they take a loan out, or they take a phone plan out, because the phone plan is what I've seen a lot, is that parents will take phone plans out in their kid's name. And then probably if the parent doesn't pay that phone plan, or the kid just doesn't understand, hey, my social security was used for a phone plan, now you're destroying that kid's chance. But you still have that opportunity because, hey, what was your age and what was the situation? So then it's really just making sure that you're writing down everything, and then you're verifying. I know that, I don't know. Oh, you're welcome. What's the next question? Pardon me. I know that having several lines of credit open will help. So the question is, I know that having several lines of credit open will help improve your credit score over time, but is there any amount that would be considered too much? Example, having 5 to 10 credit cards / loans, or not as long as they're handled responsibly. So people try to say that you should have about probably three credit cards and probably 5 to 7 open accounts. So the open accounts is just what is open in your name that probably has a balance, a high balance. So personally, I would say 2 credit cards personally, and making sure that those have rewards, having rewards in any situation that you want. And then the loans, because you can have, example, you can have a car loan, you can have a house loan, you could have probably what's the other one? An education loan. So you could have various loans, but knowing that, hey, can you afford it? And what is the debt, all the debt, and then what is all the income, your debt to income? And are you being able to pay that down? And then also making sure that, hey, what is the APR for each of those loans? Because it's also good to, as I said, consolidate. Because if you're paying multiple minimum payments, it adds up. And sometimes you won't keep track of it because it could be on different days. You could pay one on the 15th, one on the 27th. So just making sure, hey, how can I make sure I consolidate it and keep track of my payments? Does that answer your question? Okay. Next slide, please.
And I was just going to comment to Maj. I had a friend whose sibling took out loans in their name, and it was such a complicated situation. So I'm glad you addressed that.
Yeah. Thank you for sharing. And as I said, just to review, let's just review. And the next slide is going to be planning for college. So let's review these terms real quick. We have the vocab terms: interest, credit scores, loans and credit cards, and then benefits and risk of credit. I would say ask any questions, but I think everyone asked some questions. So let's just go to the next one real quick. Planning for college. I have a little lag. Okay. Planning for college or post-secondary education, or it could be a certification, because it's not only going to college, but it could also just be going to a trade school. So not just saying, hey, it's not the only way, because there's still a lot of different trade programs that you can still make a lot of money in, and you can still start a business. So as I said, there's multiple routes. There's community colleges, there's state schools, there's private universities. Community college is still a higher education institution that provides like a 2-year associate's degree. And then you have the other programs. You have 4-year programs, as I said, that's like the private, and then the state universities / colleges. since we're in New York, we have the opportunity of going to either like the state schools in New York, we have the opportunity of either going to SUNY, which is State University of New York, and then CUNY, which is City University of New York, and just making sure people just say, hey, there's really no difference. It's just that one is say state and then one is just city, and you still have the opportunity to go to both. Because as I said, since you're in New York, you have the access of paying in-state tuition for both of those. So next slide, please. So college toolkit and cost of college, that's always a big thing. So I went to Stony Brook, and my cost of college is around in-state tuition, probably like 10,000. But then you have room and board, then you have a meal plan. Sometimes the meal plan could be very expensive. My meal plan was $2,200. So cost of college. So, and FAFSA, utilizing FAFSA. I read a recent article that said so much people haven't actually applied or forgot to apply for FAFSA, and just knowing that that's an opportunity to get free money depending on your estimated family contribution or financial contribution. So they would run your EFC, and then depending on your EFC number will depending on how much money you get. And FAFSA is not only grants, but it gives you access to subsidized loans and unsubsidized loans. And we'll touch on that a little bit more. But so always research like different ways of what credit you can get, because I had a friend and her situation was kind of different, where she was transferring to a different school and she had to just understand the differences of sub, unsub, parent plus loans. And it's very discouraging. And sometimes people don't have access to the information when applying to school. So just really doing your research. I was a part of different organizations when I was in high school that helped me follow the process, like Upper Bound or Vassar Exploring College. So I had those resources. I'm first generation, so it was really difficult for me to just say, hey, I'm gonna go to college and just not worry about it. So I really had to like sift through the information, ask friends. Sometimes like your guidance counselor won't help because sometimes you won't have privilege to like the best guidance counselors, but sometimes just going to people, literally, because some people have went through your situation. So not being afraid to say, hey, how did you navigate through it? Next slide, please.
I just had a quick question, Dimaj. I think when I was in grad school, I used to do my FAFSA when I did my taxes. Is that still a possibility?
Yeah. So for me personally, my mom has a tax person, so I've used him since I was in high school. So I just always use him, and I always made sure that, because I would work at Rhinebeck Bank in the summers and winters, so I would get my W-2 like around like we say January, and then when I would be in school, I would file my W-2. And I knew people who did it by themselves with like TurboTax, but I would file my W-2 and I would try to claim as much money as possible. So that's also another thing is, yes, filing your W-2, because if you do work on campus, it's also, you pay taxes. So making sure, hey, what are some different ways that I can get that money back? So I could probably pay for books, because books only go up in price. So is this the side where it says cost of college life? Okay, thank you. So cost of college life, tuition is only part of it. There's a lot more to college costs. Discover what they are and how much to pay for them with our coach. So as I said, we partnered up with an organization called Bonsai, and you're not the way, but we partnered up with Bonsai, and then we back office, Josh, help with the QR code. As I said, we understand that there's digital transformation and a lot of people want access to things easier. So as I said, using your phone, using your phone and just going QR code. And just as an example, the cost of college life, this is almost how it would be. And this is very interactive, I would say. So you just press get started and then it would come up with a pop-up, and it's going to just take you through different things and ask you, what are your challenges? How much? Yeah, exactly, Melissa. So it would just be like, let's do it. And then you're able to just interact with the site. And it's very personal. So as you see, it says right here, I hope everyone can see. It says, let's get the big one out of this way. First tuition. how does your school break up the year? So that's one thing. And then you click it, and as I said, it's so interactive that it will just come down. And if you want to just go through it, you can go through it. But say you want to go back, you could save your information by just putting an email address and creating a password. And now the information is always accessible to you. And if you have like a family member or a relative, you just say, hey, sign up for the site so you could just understand what's the cost of college life. Because as I said, there's different people that navigate the situation, and it's really just the information. Some people navigate it better than others just by having a little bit more information. So why not just go through it and see what you find out, right? So give me 1 second. Next slide, please. Give it 1 second. Okay, so FAFSA. So this is, for me, FAFSA is sometimes challenging. When I went to school, because I started college 2016 through 2020, and FAFSA was very difficult for me. And as I said, first generation, it's hard to navigate it because you're getting your tax returns of your parents or your guardian, and you're having to input that information so you can receive funding. So I messed up. I'll tell you, I did it right 2 times, and then I messed up the 3rd time. And then by me messing up, I had to get my mother, have her give me her whole, what's it called, her W-2 and also her tax return, but I had to get it verified from the IRS because they said that probably I could be manipulating the situation. So I would say messing up sometimes is hard, and sometimes it's an extra step. So making sure that you're just going through it slowly, because I was trying to rush, and then going through it early, because it's a pool of money that can probably lessen depending on how much people get it. So just knowing, hey, if I start around February, because that's when it's almost accessible to like recurring students. And then if I start around that time, I would probably get the amount of money I'm going to get back in March. You get a decision very quick. So FAFSA again, so that's free application for federal student aid, FAFSA. Current and prospective college students in the United States determine their financial eligibility for student aid from the government. It's just a form with a completed tax return information with guardian, family members, and you could say the student applying. So it asks how much people are in your family house, who is your relatives, who is your parents, and then you're having to get all that information and put it into a system. Then the government uses that information for your undergrad or your graduate, and they offer you either a federal grant, which you don't have to pay back, grants you don't have to pay back, or a loan, and sometimes work study. So the loan will be subsidized and then unsubsidized. And as I said, I'll come into that. And then the work study, you have to be approved most of the times from work study, because you'll see when you go to college, certain jobs on your college campus will ask you specifically, do you have work study? Because they will help work study students first before they help like a regular student sometimes, because they know that the government set aside a certain amount of funds. So an example of like my situation, like when I went to college, I got 5,000 in grants. I had 2,500 in TAP. So TAP is tuition assistance program. Think of it like this: since you're a New York resident, you have parents or guardians and they pay taxes. So New York is saying, hey, since your parents or your guardian pay taxes, we have a slush fund a little bit. And then depending on your financial situation, you can access the slush fund, which is TAP. And then you input your financial information on TAP's website, different from FAFSA, and they give you grants too. So I got 5,000 from FAFSA, I got 2,500 from TAP, and then I got 3,500 as a federal subsidized loan. And then I was an EOP, which EOP is Education Opportunities Program. So depending on your financial situation and depending on the school that you went to, there's also another way that you can get into college, almost like a back door, where that, hey, because you were in that certain situation, we're providing you an opportunity to still get into our school because of your challenging situation. And I got $900 from them. And then I would get a $450 book stipend, and then also like a 900 SEOG grant. So let's just go into subsidized loans. So subsidized loans are loans for undergraduate students with financial need, and they're determined by your cost of attendance. The most important thing I would say is that subsidized loans, the government is paying the interest rate. They're paying the interest while you're in school. As soon as you come out of school, you pay the interest. So that's very important that I took out, I specifically only took out subsidized loans, but the government was paying my interest. And as I said, credit history, I have a good credit history because they've been paying. So understanding to use the situation to your benefit. And then unsubsidized loans, that can be used for undergrad and grad, and you need to demonstrate like a need, but you're paying that interest rate while throughout school. So, any questions?
We
No?
just had one question from a previous slide about the credit when we were talking about the situation. If somebody had utilized their children's name, if the child did then report the situation, would there be any repercussions towards the parents?
Possibly. We could talk about that more. Can you write that person's name down, and then we could probably just talk about it more after the chat, talk about their situation. And see if we can
Absolutely.
figure it out.
I don't think there are any other questions. Are there any other questions, team? No. Okay, we can keep going.
No way. And so, as I said, so different as you have different loans, subsidized, unsubsidized. You have the TAP where I said where it's just the New York residents pay tuition, and then they give you a grant. So you having to go to a New York school to access TAP. That's also another thing. You have HEOP, which is HEOP or EOP, which is HEOP is for private schools, and then EOP is for state schools, and then you have SEEK, which is another program for students. So just understanding that there's different programs and what can you apply for to get the most money, because you don't want to actually pay that much. And if there's grants out there, what is the accessibility of you just understanding what grants to apply for? So next slide, please.
I'm on the college as a major life stage event slide. Is that correct?
Yes, that's correct. Thank you. I can't see, so I'm trying to go on my slides. College is, as I said, college is a major life stage event. Understanding the cost and understanding your resources is also important, but not just putting yourself in one bucket and saying I have to go to college, because trade schools are a great path to learning and providing the skills needed for success, right? Trade schools give you opportunity to learn on hand and also to receive payment while you're going through the process. So you have plumbers, you have electricians, you have pipe lifters. And remember, you're going through probably a union, you're possibly getting a pension. So that's also like another form of retirement that you could do your 401k contributions with like an IRA personally, but you could still get that pension where a lot of jobs, a lot of organizations are getting rid of pensions. You really see that for certain organizations now, or certain state jobs or government jobs where you'll still have a pension. So that's also a resource. So just to give some salaries, if anyone wanted to know, like a plumber makes 56,000, electrician 56, pipe lifter 55, but that's like starting out, and that's probably like with the first 4 years after you're done with your journey training. So just knowing, hey, how can I get the skills and how can I utilize a bank or an organization so I could probably create a business? Because you have a lot of plumbers that are in Poughkeepsie, in the Hudson Valley, or in Newburgh or Orange County, where they're making over 400,000, they're making over 250,000, they're charging $150 per hour. So just knowing, hey, I still have that option of doing a trade. And then if I did want to start a business, what are my resources? Who do I know? And just reaching out, because it's just getting a business plan. So next slide, please. And as we're very trying to get very technology friendly. So we put another QR code, and that's just a finishing of like going to college modules. So we have so we have a bunch of different modules, and that's a specific topic of going to college. So there's like a budget calculator, there's the FAFSA document, there's the cost of college. So you're going through the different modules and seeing, hey, what can I learn from each one? Does my situation play in part of it? Because as I said, it's interactive and it literally will dictate how much you probably need to pay and get that little chart for you. And so it's also good. So as I said, examples, budget calculator, finding a place to rent, working with a landlord, because if you don't want to live on campus, that's also another thing. And then the college budget breakdown. So that's really it for me. So does anyone have any questions?
There are none in the chat. So we just want to thank everyone from United Way for giving us the opportunity to participate today, and we look forward to seeing even more folks, hopefully in June.
For a fact. Thank you, Melissa.
Thank you so much, Tim. Thank you, Dimash. Does anyone want to unmute and ask Dimash any questions while we have him? Have our expert here in-house?
Thank you, Kaylin. I appreciate it. Thank you, Maria. How do we access this recorded webinar? Melissa, this webinar will be recorded on your
website. Yeah.
Okay.
Any other questions? Feel free to put them in the chat or unmute yourselves.
And if anybody has any questions, they can always contact anybody, any of the Rhinebeck Bank branches. I will note that many of our branches where there are multilingual communities, we have multilingual, bilingual employees as well. For example, Newburgh, Middletown, some in Poughkeepsie as well. So again, just want to thank you for the opportunity and look forward to being able to serve you if we can.
Thank you so much, Tim. Thank you, Dimash. Thank you so much, everyone, for being here. And like Tim said, feel free to, send in any follow-up questions. I don't know, Dimash, if you can put your contact in the chat once more. That way, if anyone has any more specific sort of offline questions, they can get in touch. And of course, please do not forget to fill out the survey that we'll be sending to your inbox today. And thank you again to our partner and sponsor, Rhinebeck Bank. You all are amazing. And it's just so fantastic to have this ongoing relationship and work with you. And you have so many vital tools and resources. And it's really thrilling to see all of the different modules and all the different programming that you have around financial literacy. So we really appreciate your partnership. And we look forward to the next opportunity to work together. And I hope you all have a wonderful day. And thank you so much again.